Hello everyone, welcome to the Stock Trading Tutor channel. In this video, we'll be looking at the half-yearly review, that is the top 5 events that shook the Indian markets in the first half of the calendar year 2019. So let's go into the news. Indian stock market remained highly volatile in the first half of the current calendar year because of some major domestic and global events including election, earnings, global trade war, MPC meet, NBFC crisis, weak auto sales number and so on. After hitting their highs on the election result day, Sensex and Nifty continued their upward momentum and hit 40,312 and 12,103 respectively on June 3rd. Most brokerage firms have raised their target price for both Sensex and Nifty on a one-year basis, but in the near term, they expect the upside to remain capped. For the financial year 2020, the brokerage firms expect the Nifty EPS, that is earnings per share, to grow around 26% to 604 rupees. The benchmark indices Sensex and Nifty rallied 9% each in the first half of this calendar year. Nifty Media was the biggest loser in the period with a fall of 19%, while on the other hand, Nifty Realty gained 18%. Now let's look at the 5 major events of the first half of 2019. First was the NDAs thumping victory. The Indian indices got a major boost from the exit polls and results of the general elections. After the exit polls, the Nifty rallied 3.7%, giving a clear mandate to the BJP government. BJP won 303 of the 543 seats on its own, and that brought an end to political uncertainty and instilled confidence among investors on continuity of reforms. After rallying about 10% so far in the year 2019, most experts feel that the benchmark indices might take a breather till the full budget, which will happen to be presented on July 5th. Umesh Mehta, the head of research at Samco Securities, said that there is a high probability that markets could make a top and then tread in a range till the budget, as Nifty is trading at extremely high valuations with upwards of 20 times their PE on the higher end of the band. The next major event was RBI cutting the policy rates. The Reserve Bank of India, also known as RBI, in its policy review meeting on June 6th, expectedly cut repo rate by 25 basis points and changed its policy stance from neutral to accommodative, citing growth concerns. This marked the third rate cut of the year so far. RBI is likely to cut interest rates by another 25 basis points in 2019 due to weak growth momentum and inflation remaining within targeted limits, according to Fitch Ratings. Many other analysts also echoed this opinion. According to Lakshmi Iyer, Chief Investment Officer and Head of Products at Kotak Mahindra AMC, the repo rate cut was broadly in line with expectations. The shift in gear from neutral to accommodative removes ambiguity with respect to the direction of the rate action. However, the central bank has not mentioned any special package for NBFCs, barring the appointment of the working group to look at liquidity problems. The next event of the year, the major one, was the Jet Airways saga. Shares of the cash-strapped airline remained under pressure as the company was forced to suspend its operations and finally was taken to the NCLT by its lenders. On June 20th, 2019, the share hit a record low of 27 rupees after the State Bank of India filed insolvency petition against the company to recover dues. The country's largest lender, State Bank of India, approached the National Company Law Tribunal in Mumbai against the cash-strapped Jet Airways on behalf of the consortium of lenders. Jet Airways shares lost more than 80% in the last 6 months. The next major issue was the escalating US-China trade war. The US-China trade war worries also kept the Indian indices under pressure as two big economies kept slapping tariffs on each other, leading to strained relations between them. US President Donald Trump, worrying about his country's trade deficits and in a bid to strengthen the US economy, introduced tariffs on most of its trade partners. However, the US government on June 26th said that it is absolutely possible that Trump would emerge from a meeting with Chinese leader Xi Jinping with a deal that would keep him from imposing tariffs he had threatened to put on China. The next major crisis was the NBFC crisis. The crisis in the NBFC sector started with a series of defaults by IL&FS last year. This had a cascading effect on the market and many other NBFCs, which have since been finding it difficult to raise funds. Banks are still wary of lending to the sector. The cost of funds rose as much as 150 basis points for NBFCs. In the last financial year, RBI bought government debt paper worth 3 lakh crore rupees from the market. This was the only way for RBI to help NBFCs since the central bank can't lend directly to the latter as they don't hold government paper for use as collateral. But the cost of borrowing for NBFCs is still high. The default by DHFL on interest payment to its debenture holder, followed by its rating downgrade by ICRA and CRISIL, has raised fresh concerns on liquidity and growth sustainability of NBFCs. CRISIL downgraded the credit rating of DHFL's commercial paper, making its short term unsecured promissory notes more vulnerable. Care Ratings also downgraded the instruments of the Anil Ambani Group companies, Reliance Home Finance, and Reliance Commercial Finance. Prasun Gajri, the CIO at HDFC Life Insurance, said that given the current issues with NBFCs, there could be some risk aversion and investors could move away from debt funds. However, he believes that this will be a temporary phase. So, here are the sources for this specific news item. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to start trading with the stock market, you can create your Demat account with Alice Blue. Just click the link in the description and fill out your details. With Alice Blue's broking services, you'll get excellent exposures and margin for trading in the stock market.